Welcome to Startup Sim. In this tutorial, we will present the assets section of the balance sheet in an area. So the first document that you can read in the company report is the balance sheet. The balance sheet is made up of two sections, the assets on the one end and the liabilities and equity on the other hand. Assets are made up of the following elements. The first element is cash, because balance sheets are organized by diminishing liquidity. Cash, being the most liquid, is the first element that is listed. In this case, this company has no cash left. Probably they have invested too much in their savings account. The second element are account receivable, A-R, period 9. This company 9, is running period 8, or has just received the results of period 8, and therefore is now considering its accounts. Account receivable, period 9, means these are the payments due in period 9, in quarter 9. And account receivable, period 10, are payments due in quarter 10. So they are payments that are due but will be made for sure. You can count on them because they will actually be credited to your account, to your bank account. So it's rather liquid in the near future. Then comes a number of inventory. Inventory are goods that are stored by a company. Any company in Startup Sim can store two products and two categories of each product. The standard quality is the lower quality, and the deluxe, DLX, is the higher quality. The same goes for PC. Each of these storage has a certain value, which is the weighted cost of acquisition. They can be produced, or perhaps they've been purchased from another company. In both cases, this is the average variable cost. And the sum of this is accounted for in inventory total. Then come government securities. Government securities is like a savings account that this company is using to buy treasury bonds, and this money will be returned to them plus an interest payment, and so they can put idle money into their savings account. All these elements form together something called current assets. In this case, in the US, it's like $13.38 million, so quite a lot of money. This is an important information for this company because the current asset is one of the elements taken into account to decide by the simulation model how much money this company would be allowed to borrow from the local bank, from the US area bank. Then a second section within the asset category is the fixed assets. The fixed assets are made up for any company of net plant and equipment, the factories that it may have purchased or built, and intercompany loans that this company could have made to another company in the simulation. Here there is no loan. Then, of course, total assets will be the sum of current assets and fixed assets.